Hi dear friends, today is Friday, August 4th. Let's look at the charts for the euro and the pound sterling and discuss their outlook. It is clear that the euro had some trouble in the first half of the day due to weak services PMIs for the eurozone. Revised indices came in worse than in flash estimates. Composite PMIs were also downgraded. No wonder the data weighed on the euro. In the second half of the day, traders were interested in the ISM non-manufacturing PMI for the US and a weekly update in unemployment claims. Though the index remained above 50 on the expansion territory, it was revised downward, so the US dollar could not climb above 1.0915 against the euro. The British pound made more interesting moves. The weak services PMI for the UK also pushed the sterling down. Later, the Bank of England raised the key interest rate by 25 basis points to 5.25%, which revived demand for the pound. In the following press conference, Governor Andrew Bailey sent a message that he was not going to follow the path of the US Fed and the ECB. Despite easing inflation, which allowed the central bank to raise interest rates by a quarter percentage point, not half percentage point like last time, the regulator will pursue the same hawkish policy. Hence, more rate hikes are needed until inflation is firmly brought down. With this rhetoric, the pound recouped losses before the crucial date today. The pound remained in the same corridor where it opened yesterday. Let's look up the economic calendar for today. We will get to know factory orders for Germany, industrial production for Germany, France and Italy, the construction PMI for the UK, and the euro area retail sales for June. The latter report is of no importance ahead of the crucial non-farm payrolls. Curiously, the ADP payroll processor reported on Wednesday much stronger than expected employment growth. Analysts expect a minor decline in the official jobs data, though a stronger figure is not excluded. If so, the euro and the pound sterling will lose ground against the US dollar. It's a realistic scenario amid speculations on further tightening by the US Fed because the labor market shows a remarkable resilience despite high interest rates. The US economy remains on a sound footing and as it was proven by the latest GDP data. Such a fundamental picture could assure the US Fed to continue its fight against inflation by raising interest rates. Inflation might accelerate again this autumn. That's why the non-farm payrolls are a high-impact report. If the economy adds fewer jobs, this will be bullish for the euro and the British pound, and the greenback will weaken. And now let's discuss the technical picture. On the 1-hour chart of the euro-dollar pair, I've shifted a bit to the borders of yesterday's channel without major changes. Here is resistance at 1.0966. The market is struggling for 1.1002, the medium-term target. In case of a weak data from the US, the price will jump to 1.1015 and even 1.1063. I will plan short positions at 1.1015 and 1.1063 only on the condition of a false breakout. If the US data again is stronger than expected, the euro-dollar pair is sure to fall to 1.0915. If this level is also broken and tested from top down to top, the US dollar will be hit by a huge sell-off with downward targets at 1.0871 and 1.0836. You may wonder about buying the currency pair during a decline. You could try this on the bear market if there are false breakouts at 1.0915 and 1.0871. It would make sense to open long positions only in this case. We could also try going long at a dip from 1.0836. As for the pound sterling, the market is struggling for the level of 1.2735. If the price climbs higher and settles above amid robust trading activity, this will create the conditions for going long, betting on a higher move with the targets at 1.2786 and 1.2836. Importantly, this scenario will come into play with weak non-farm payrolls. Sell positions would be appropriate at a bounce from 1.2836 with the targets at 1.2786 and 1.2735 during the European session. In case the pound sterling weakens, I think the bulls will try to assert their strength at about 1.2681. The instrument might rally after the jobs report. In case of active buying activity, a false breakout would be a nice point to open long positions. I mean, we could go long from 1.2623 or from a local low of 1.2592, betting on 40-45 pips intraday correction. Good luck in trading.